Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for a CSE Podcast. I'm joined today by my wonderful friend and colleague, Jeff Clark with the Gold Advisor. Thank you for joining me, Jeff.
Thank you for having me, Anna. It's great to be back with you.
Okay, so you joined us. You come into town for the Metal Investor Forum, and the last time you were here was the Metal Investor Forum at the beginning of the year, which also coincided with VREC. And you're back here for another Metal Investor Forum, which you speak at regularly. So thank you for coming into the studio and chatting with us and providing us with an update. You know, I think the one thing that we've seen at the CSE over the past few months since we last talked is this continuous ability for our issuers to raise healthy sums of capital.
Yes.
You know, we're obviously in the winter months, so a lot of our issuers aren't necessarily on the ground yet. Some of them are, depending on where they're drilling. And so we're going to start seeing, you know, some stuff come through from our issuers as they go into work programs into the summertime. But we saw a lot of our financings were oversubscribed. We saw lots of healthy capital come in from the US and from Europe and other jurisdictions, which is always great to see that come into Canadian companies. We've also seen a lot of movement geopolitically with commodities and pricing, but you know, there's still, gold is still doing what it was doing when we chatted last. So, so my big question for you is, are we done this bull market, or is there more to come?
In my opinion, that's easy. There's more to come.
More to come,
so
great.
My theme has been, is there a second half to this bull market? The answer, in my opinion, is yes. But it's not just my opinion. It's based on history and trends and facts and data, you know, gut feelings, financial conditions. You throw all that together, and the picture becomes very clear to me that, yes, there is a second half to this bull market, and it is ahead.
Okay.
What's interesting is I want to point out a chart that I did. A lot of people are saying this is a mimic of the 1970s bull market, not the 2011 bull market. And that's been my opinion for a while now.
Okay.
But I went back and did a correlation coefficient between this bull market and the 1970s bull market. From 1976 to 1980, and then from ours, 2024 to present.
Okay.
And the correlation, believe it or not, is 95%.
Wow.
That means we're following the 70s bull market 95% of the time on a daily tick basis.
Wow.
So this is the 1970s bull market, which has major implications for how we look at things going ahead. So,
okay, so if I remember correctly, you know, that was a lead up. We also had major inflationary pressures that were happening at the same time. Is that a similarity you're seeing as well, as kind of a bit of a market, so it's aligned, but there's also, it was quite high inflation, wasn't it?
Well, we had high inflation, it came down, and now it's starting to come back because of the war. You know, all those pressures are pushing on supply, so inflation is ticking higher. It'll probably go higher. You know, the only way that's going to come down is when the war ends. And it'll take some time for it to come back down. But you notice the Fed, the U.S. Fed, did not raise interest rates at their last meeting, even though inflation had ticked higher. They think it's under control. You know, whether that's true or not, it remains to be seen. But they didn't raise interest rates.
You seem skeptical about that.
You know, who knows?
Who knows? Okay,
you know.
okay. And so why do you think that they're so aligned, these two bull markets?
That's a great question. You know, the 1970s bull market was a very firm, solid, ever marching higher type of bull market, whereas 2009 was more of a mild bull market. It was a confirmed bull market, but it was more mild. There was no mania involved. We've already had two mini manias, one last October, one in January. We've since come down, you know, pretty hard off the January highs. We've bounced back a little bit, but we are following with a 95% correlation. And by the way, even if you go back to, some people say, well, the bull market started in 1970, Jeff, not 1976. So I went back and looked at our current bull market relative to the full decade of the 1970s, and the correlation coefficient there is like 93%.
Wow. That's amazing.
However you want to measure this and look at it, the math says we are very closely correlated to the 1970s bull market, and that has major implications ahead. So either we're 2 years into what will be a 4-year bull market, or we're 2 years into what will be an 8 to 10 year bull market.
Wow.
So, who knows?
Okay.
There are no guarantees.
My preference is the latter.
Sure. But it also implies that there's a bigger move ahead. And that's why I focused on the fact that I believe there is a second half to this bull market. And the second half is typically bigger than the first half.
Right.
That is borne out by what gold and gold stocks did in the latter half of the 1970s. Just the mania itself, everything doubled, tripled, and went 10x. There are some that went 20x.
Yeah.
So all of that is still ahead if we continue to mimic what happened in the 1970s.
Okay. So either way, you're seeing that there's still great opportunity in the foreseeable future.
Absolutely,
Potentially
especially
long-term.
because we've had this pullback.
Okay.
If you measure the correction that we had in gold and gold stocks,
Yeah.
silver and silver stocks,
Yeah.
from their peak in January to their bottom,
Yeah.
that was a pretty big sell-off.
Right.
We're above that now, but that sell-off, the extent of that sell-off,
Yeah.
tells me that there's roughly, give or take, a 90% chance that low was the low for this cycle.
Wow. Okay.
Now, it doesn't mean we're not going to have down days, and it doesn't mean we couldn't break it.
Yeah.
But the odds are, based on history, that signal the low is in for gold, silver, and the miners.
Okay, so based on what's going on, globally right now, is there certain jurisdictions that you like over others?
Oh, definitely. My backyard, Nevada, is always rated a top jurisdiction.
Is one of the top three, isn't it? By the sun.
It's always in the top.
Yeah,
And for good reason. Permitting is easy. There's a ready labor force.
Yeah.
Lots of reasons.
Yeah.
The second, in my opinion, would be Quebec.
Okay.
Or I'm not putting them in any order, but
Sure.
Quebec would be one I'm very interested in.
Okay.
And then once you leave there, you're going down the ladder a little bit.
Okay.
It doesn't mean we wouldn't invest in jurisdictions outside of there.
Yeah.
But I really like to look. There's so many opportunities in just those two jurisdictions alone that you don't need to look elsewhere for 90% of your portfolio.
Yeah.
So we're already in the most risky investing sector in the world.
I know.
In the junior minor. So why add to that risk with
Sure.
political issues? So
Sure.
Again, it doesn't mean we won't look at,
Yeah.
I'm in Argentina, I'm in Colombia, I do have some BC investments. So
Yeah.
it doesn't mean you don't look there. It just means you don't want to denominate
Yes.
the bulk of your portfolio to jurisdictions that aren't top tier.
Now, do you have any thoughts or opinions on, both in Canada and the U.S. on permitting? Do you have any thoughts there?
Well, obviously, since Trump has come in, he has pushed a lot of regulations to either tighten or go away in some cases. So it's made it easier, and there's been some spillover into Canada. Not necessarily BC,
When
but
you
in
say
many
tighten,
other provinces.
but he made it more accessible, right? So
Exactly.
Hopefully, we're giving more permits out to potential mining.
He's made it easier to get a permit.
Yes,
He's
exactly.
shortened the time length to
Gotcha.
get a permit.
Right.
It doesn't mean everything is just hunky-dory rosy, but it has improved the sector because it was getting a little out of hand.
It was getting a little out of hand.
You can't wait around for 2 years for a drill permit or a mining permit,
Right.
environmental permit.
Yeah.
It can be more efficient than that. And he has served, not making a political statement, but it has served to
Yes.
improve the environment. And there's been a spillover into other countries and provinces and states as well. So.
Well, I mean, I think, as an investor, we would like to know that if we're investing so early stage and that there is good drill results and pre-feasibility studies and you go into finding a resource, that you have the opportunity to participate all the way through.
Yeah.
And it would be a shame to think you get to a certain point and then you kind of are at a standstill, right?
Yes. So you can, I invest in some pre-discovery, some post-discovery, some resource builders, early, pre-producers leading up to construction. The one category that probably, in all fairness, still takes a while is the development story.
Right.
Where they shift completely. They've got a discovery, they got a resource.
Yeah.
Now we're going to shift to permitting and development and engineering and
Right.
all those things.
Complex.
That still takes time.
Yes.
And so the stock tends to be a little boring during those times.
Right.
It's just that period is moving along a little bit quicker now,
Great.
generally speaking.
Okay, that's great. Any other commodities that are of interest? I mean, I know you follow silver and copper and what was the other-
Uranium,
Uranium.
yeah.
Okay, so tell us your thoughts on what you're seeing there.
Silver, I think the audience knows, is much more volatile than
Yes.
gold. It's such a small market that it doesn't take a lot of capital to impact that price, good or bad.
It's like a toddler stepsister, right? It
Yeah.
kind of, it follows you along, but it does have its sporadic own moves within
Yes.
itself. Okay.
Yes,
okay.
it does tend to follow gold, but it's going to be much more volatile,
Yeah.
which can be fun on the way up, but you got to be careful on the way down, right?
Right.
For copper and uranium, they kind of have a similar thing. There's a supply-demand issues. Now there's political support. There is environmental support
Right.
for all of this. And so you
Okay.
have some tailwinds, some structural tailwinds behind both of those markets
Okay.
that really support them, what I think will be for years to come.
That's so great.
I really like opportunities in copper and uranium as well.
Okay, that's great. So as an investor in the space, what would be your go-to investment right now? Is there a golden child of investments right now, as far as, it doesn't have to be a specific company, but you're looking for this?
Oh, well, it isn't that for me. I've written a book on the subject, but I'm looking for the starting point is the three legs of the stool: the people, the property, and the projects. So
Right.
it all starts there for me, and it's not
So it's unique
commodity
for you.
driven. It's more company driven.
Okay.
Because you have to have a company. You're not just investing in the commodity. In fact, you're not investing in the commodity at all.
At all,
You
right.
you don't have any access to that commodity
Yes.
whatsoever. So it's company, and so now you have to look at the structure of that company, and does it meet the kinds of things that could give this a double, triple, 5x, 10x return
Yeah.
on your investment. That's what you're looking for.
What are the 3 Ps again?
People,
Yeah.
politics, and projects as last. And I do look at them in
Yeah.
that order.
Okay.
Every once in a while somebody will say, "Did you see the drill result of XYZ?" And if I hadn't seen it, I don't ask about the drill result. I say, "Okay, well, who's behind it
Right.
and where is it?"
Okay.
That's the two things I want to know.
Okay.
Because if it's in, East Africa,
Yeah.
and no offense to anything
Yeah.
there, and it's someone whose last company was a marijuana company,
Yes.
I'm sorry, but I'm just
Doesn't matter how
not
good the drill
interested.
result was.
Yeah,
Yeah.
I'm just
Yeah.
not. So, and it doesn't mean I'll always be right,
Yes.
but I'm putting the odds in my favor.
Yeah.
That's the whole idea. I'm reducing my risk and improving my odds of a return. So,
Yeah.
projects, you want something like my grandma's chocolate chip cookies, big
Yes.
and rich.
Yes.
You want people who have done before what you're investing in.
Yeah.
And you want to be in a pro-mining jurisdiction.
Yep.
You do those three things, and you're already 90% ahead of the curve.
We see some of the legacy groups that have really come back over and over again with some of our issuers on the CSE. It's nice to see them so actively involved and engaged. So we continue to see that from various groups. A lot of the names that everyone knows, we see the Sprots and, the Lundins and all those guys participate. So that's really nice to see.
This is a time I'm sorry to interrupt. This is a time to do it, and they have been doing it.
Yes.
Financings are sky high.
Yeah.
They're oversubscribed.
Yeah.
I've even had a hard time getting into some of them. They're bought deals.
Yeah.
The amounts they're...
I've seen a few bought deals, which is something that we don't see very often. But
Correct.
yeah.
That's right. That's
Yeah.
right. And so we're seeing more of that. And the amounts that they're getting financed are just, really, really strong. A company that had a tough time raising $2 million 5 years ago now is oversubscribed at 10 or 20.
I know, it's great.
And what that means is there's implications for that. And
Yes.
what that means is, assuming they are disciplined with their funds.
Yes.
And that's why you always have people as your strongest
Yeah.
thing you want to look at. But as long as they're disciplined, the odds are high that we're probably going to see more discoveries in this cycle if you're
Yep.
investing in the pre-discovery or the resource builders, I call them. So
That's great.
It's going to advance our industry simply because there's more money going into
Yeah.
the ground, and that's a great thing for all of us, I think.
Okay, so this is something that I've heard over the years, but I feel like it's starting to change. Was sell in May and go away. I don't think that's a thing anymore. Do you?
For the mining sector, if you look at gold,
Yeah.
look at the gold price.
Yeah.
It's has a little volatility. It's basically flat.
Okay.
But there is 1 week where historically, over the past 50 years,
Yeah.
the gold price has dipped very strongly, and that is your last opportunity to buy for the year.
Okay.
And that is during the Independence Day holidays in both Canada and the U.S.
Interesting.
That week, Gold puts its low in on average.
Yeah.
Obviously,
Yeah. Who knows what's going to happen? No crystal
Right.
ball.
But after that, that's it.
Okay.
That would be the low for the year on average historically. So instead of sell in May and go away, I say stay in May and buy the holiday. That's what I
love it.
and history bears that out. So
Yeah.
I think that's a good strategy for people to look at, keeping in mind that each year can be different, but
Yeah.
that's what the average shows over the last 50 plus years.
Yeah, amazing. Okay, so you're going to come back in September for another Metal Investor Forum, and I hope
Yes.
you can make the time to come and see us again. What do you think we're going to be talking about in September? We'll have hopefully some good drill results back from some
Yes,
of our
we'll start seeing
exploration work that's happened over the summer.
Yep.
What do you think we're going to be talking about in September?
Well, my crystal ball is broken, but
Yeah, okay, sorry.
Yeah, no, but there will be lots of drill results out by then. There'll
Okay.
be more coming because there's a delay from when they finish drilling to when all the assays
Takes
are
a
out.
minute.
So assays will last throughout the rest of the year.
Yeah.
So it'll be exciting to see that. And there's some juniors out there that are drilling 6 figures of meters.
amazing.
I mean, it's almost hard to say they're not going to grow. They're probably going to grow. Some of these companies are going to make a discovery. Some of these companies are going to double their resource.
Yeah.
And so that's very positive, not just for the industry, but for us as investors.
Well, and I think maybe sometimes people forget when we see this much capital that's flowing into the exploration space specifically, but the mining space as well as, for the exploration space, because there's starts and stops, and there's times of the year that you can't do it. All of a sudden, if you can raise a bunch of capital, this is buying new equipment, this is hiring staff, this is, adding infrastructure. There's a lot that waves that come from this, right?
Yes, it also adds to the possibility or the increase in M&A, mergers and acquisitions.
Right.
So we've already
Is this
seen a
something
couple.
you like?
It is, and
Okay.
this was part of my talk. Was one reason or one characteristic of a second half bull market is a significant increase in M&A.
Okay.
And the valuation of the companies now versus 10 years ago is much lower.
Right.
Even when the gold price was much lower then,
Yeah.
we're lower than it was then.
Yeah.
And so that implies that, and I did the math on it, it implies like a 7 to 8x return on the better companies that get bought out. That's the kind of potential we're looking at. We didn't have that back in 2011.
Right.
We have it today because
Okay.
the gold price is so high, valuations are so low, and the majors are just printing money right now. They're printing cash, record levels from Barrick, Agnico, Newmont, all these guys. So, they're sitting on so much free cash flow and generating so much free cash flow. I do think we're going to see a significant uptick in M&A. And so if you like juniors and explorers and developers,
I do.
stick with the big one, the best you can find, because the odds of them getting bought out are much higher now than they were 2 years ago.
I love it. Thank you so much for coming to join me, Jeff, and I hope that you have some time in September and we will revisit this conversation.
We'll make time because the market will be a little different then. We'll
It will
see
be.
what happens between now and then. But all I can tell you is I'm definitely remaining long. I have lots of cash, in case we do get another big sell-off.
Yeah.
But I am not selling anything. I'm not even taking profits. I'm remaining long.
Okay.
And I'm strategically adding as we go along in this bull market.
I love it.
So
Okay,
remember, stay in May and buy the holiday.
stay in May and buy the holiday.
That's right.
And you and I will reconnect in September and see how things went.
That's great. I
Great.
look forward to it. Thanks, Anna.
Thank you, Jeff.